Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. I'm Tim Stenovec in New York. Coming up, OpenAI closes one of the biggest funding rounds in history. We're going to have the details. Plus, Anthropic accidentally releases internal source code behind its Claude coding assistant. And today is launch day for Artemis II. We are on the ground at Kennedy Space Center. We're going to get you the latest. First, though, a check on the markets. Tech stocks in the green, along with other U.S. stocks. This as optimism grows that the war in the Middle East may be nearing a conclusion. Look at what we see right here on the big board. The NASDAQ 100 off to a pretty strong start for the quarter, but this does come after a relatively bad quarter where it fell 6%. Out of correction territory, though, we should note. Also, the S&P 500 up 0.9% following a decline in the most recent quarter of 4.6%. Oil still above $100 a barrel. This is Brent crude up 101.66 is where we are, down 2%. But talk about a tough quarter for Brent crude, up a whopping 70%. We got a great program coming up. Investors are a little nervous when it comes to stocks, but still higher on this first day in the quarter. I do want to start in Washington, where President Trump has arrived at the Supreme Court for oral arguments in the birthright citizenship case. Bloomberg Washington correspondent Tyler Kendall joins us with the latest. Tyler, an unprecedented move for a sitting president to attend these arguments at the Supreme Court. What can you tell us?
Yeah, hey, Tim. So we're about an hour into the oral arguments here at the Supreme Court. Right now, the U.S. Solicitor General John Sauer is still being questioned by the justices. We have to keep in mind this case centers on President Trump's executive order that he signed on the first day in office seeking to bar U.S.-born children of undocumented immigrants from obtaining U.S. citizenship. And what the justices are looking at today is the Trump administration's interpretation of the citizenship clause under the 14th Amendment. We're not going to get too wonky into it here, but the Trump administration, as we're hearing outlined right now by the U.S. Solicitor General, is essentially arguing that in order for the amendment to apply, it requires a relationship of what he is calling full allegiance to the United States, which the Trump administration says does not extend to undocumented immigrants or temporary visitors. We are about to hear from the challengers in this case. The ACLU lawyer is about to be questioned by the Supreme Court justices, who argues that the 14th Amendment has a long-standing legal precedent of granting citizenship to those born on U.S. soil. Now, Tim, we're not expecting to get a ruling today from the justices, but rather we're looking for those signals on how they may rule. We had some indications going into this that some conservative justices may be skeptical, and that appears to be echoed in what we have heard so far. That includes Chief Justice John Roberts calling one of the administration's arguments, quote, quirky, although it does appear the administration has some sympathy. I'll give one example. Samuel Alito, conservative justice, saying that the administration is likely correct that when they were ratifying the 14th Amendment, the drafters weren't thinking about undocumented immigration. So it's going to be something to watch here, but you're exactly right. This is very unprecedented. The first time we've ever seen a sitting U.S. president inside for oral arguments as they decide the future of one of his key policies.
Bloomberg's Tyler Kendall with the latest outside the Supreme Court. Let's turn now to the Middle East, where tensions remain high as the war with Iran continues. President Trump said he'll only consider a ceasefire if the Strait of Hormuz is fully reopened. He is set to address the nation tonight as questions grow over the path forward and the broader economic impact. For more, let's bring in Bloomberg Balance of Power co-host Kayleigh Lines. Kayleigh, the back and forth between Washington and what we're hearing and what we're learning out of Iran, there still seems to be quite a bit of daylight there. What can you tell us?
Yeah, there certainly is, Tim, which is a repeated pattern. The U.S. says one thing, Iran pushes back. There's also a repeated pattern that the president says one thing or is reported to be considering one thing and then says another, as we are in a very different place, it seems, regarding the Strait of Hormuz than what the Wall Street Journal indicated yesterday, which was that the president was considering at least wrapping up military operations without the strait reopening. Now he says there will be no ceasefire if the strait is not open. But Iran is very much pushing back on that in a statement citing the Iranian Revolutionary Guard Corps in state media. They said said, and this is a quote, "The Strait of Hormuz will not be open based on the absurd displays of the American president," going on to say that the situation in the strait is decisively and dominantly under the control of the IRGC Navy. Now, of course, the U.S. military continues to strike that Navy and other military targets. The president alluding to that in a Truth Social post today, in which he said that until the strait is open, free and clear, the U.S. will continue to blast Iran into oblivion, or as they say, back to the Stone Ages. So this is still a war that is ongoing, and the president has indicated it could continue for at least a few more weeks. He told reporters in the Oval Office last night it could be 2 to 3 weeks more. And of course, the entire nation will hear from him at 9 p.m. Eastern time, also from the Oval, in which he is expected to address the future of this conflict. Perhaps we will hear from him as to whether or not he is considering actually deploying ground forces or another surge operation, as we're seeing more assets deployed to the Middle East, including a third aircraft carrier. Would he be doing that if he did not intend to use it? And we also can expect to hear from him on the NATO alliance specifically. At least that's what he told Reuters, that he will be addressing our allies not coming to the U.S.'s aid when it comes to this war in Iran, after he earlier told The Telegraph that NATO is just a paper tiger and that he is seriously considering withdrawing the United States from it, Tim.
A lot for Joe and Kaylee to keep an eye on. Keep an eye on them. 1 p.m. for the early edition of Bloomberg Balance of Power. Bloomberg's Kaylee Lyons joining us from Washington. Well, let's discuss the broader implications of these latest developments, especially when it comes to tech markets. I want to bring in Fiona Sincata, senior market analyst at Citi Index, for more. Fiona, I want to talk about the de-escalation trade that we saw and potentially that we are seeing today. I should note that traders at Goldman Sachs and JP Morgan are suggesting this was mostly a squeeze. What is it in your view? Is it a squeeze or is it a de-escalation trade?
Yeah, it's a good question. I mean, it's not the first time we've seen it. So I think there is reason to be cautious about whether it really is a de-escalation trade or not. I mean, obviously, we know the NASDAQ fell almost 5% across March. It moved into correction territory. It declined 10 out of the past 11 weeks. And it's rare that we see such negativity towards tech stocks. So, there really has been a lot of sell pressure on the tech sector, but we are seeing that bounce back. The daily performance yesterday was the best in almost a year, and that de-escalation trade or squeeze that we're talking about is holding today. Now, I think there is reason to be cautious here because, I mean, although we've heard before from Trump that we could be sort of, moving towards an end to the war, the market, I don't think, is going to be convinced until we see that Strait of Hormuz reopen, or at least, clear signs that we're heading in that direction. And the reason for that is because whilst oil prices remain high, Treasury yields are also going to be remaining high, and that just sort of takes or hits demand for equities, and particularly for tech stocks. We do tend to see that they come under pressure as yields rise. Now, yields have come back from that sort of almost 4.5% that they were at on Friday to around 4.3 today. But as I said, I think we really would want to see more concrete signs of that Strait of Hormuz reopening in order for this trade to really gain much more traction and retake some more key levels on the way up.
I'm so glad you went there because that's exactly what I wanted to talk about. With Brent crude above $100 a barrel, WTI very close to $100 a barrel, I think a lot of people are scratching their heads saying, wait a second, why are we seeing a surge in equities, especially tech, if oil is still this high, Fiona? To what extent are oil prices tied to tech stocks?
Yeah, so I mean, you wouldn't necessarily immediately link the two together, but as I said, that elevated oil price adds inflationary pressures globally, but particularly if we're looking here at the US as well, and that just really does keeping those Treasury yields elevated. Now, that also sort of supports the view that the Federal Reserve is going to be taking potentially a more hawkish approach to monetary policy. All of this ties into the fact that we're seeing less support for tech stocks. Lower yields are beneficial for stocks, but more importantly for tech stocks, because they reduce the discount rate applied to future earnings, making valuations more attractive. So when we have those higher yields, that really does make tech stocks less attractive. So as I said, I think oil prices are going to remain key. And I think, interestingly, even if we do see that Strait of Hormuz reopen, it will take time for oil prices to come down. And if they do come down, and when they do come down, I guess, the actual baseline rate is likely to be much higher than what it has been, that $60 a barrel, more towards the $80 a barrel, because we're going to see it a longer period for that sort of normalization. But also, I think there will be a risk premium that will remain tied in there.
I want to throw something at you. It's private markets now, but expected to become a public equity this year. And that's OpenAI. We're going to talk to Shireen Ghaffari from our Bloomberg News team. She reported out yesterday the $852 billion valuation after a $122 billion round. What does a potential IPO of OpenAI and of Anthropic this year do to the broader tech equity market?
Yeah, I think it would be extremely exciting. I think there would be a huge amount, unprecedented amount of interest. And I think it would actually be positive for the AI trade. I think the AI trade has come under pressure. We've seen sort of, a lot of questions about where it's going, whether it is whether the rallies that we've seen over the past sort of year, they've obviously come into question, I would say, over the past 6 months. And I think sort of those IPOs going public in those companies would actually potentially redrive attention and interest into that trade.
Fiona Sincata from Citi Index. Fiona, always good to check in with you. Thanks for joining us on Bloomberg Tech. Well, coming up, as we just mentioned, OpenAI closing one of the biggest funding rounds in history. We're going to have the details next. This is Bloomberg Tech. OpenAI is now valued at $852 billion. The AI company closed a $122 billion funding round intended to help with its costly push for more chips, data centers, and talent. Let's get the details with Bloomberg's AI reporter, Shireen Ghaffari. Shireen, those are big numbers. I like in the piece you said this funding is by any measure one of the largest transactions in history, dwarfing not just previous fundraising rounds by fellow privately backed startups, but also acquisitions and IPOs. Is this it for OpenAI before it goes public?
We don't know yet, but it definitely could be. In a press call with OpenAI CFO, she talked about how this helps them have maximum flexibility. If they want to remain private for a little longer, they could. If they want to go public, they also could. Obviously, we are heading into a year where we are expecting some AI IPOs, including potentially OpenAI. However, given A, the macro uncertainty and changing conditions, and B, the need for these companies to prove a very solid path to profitability, at least in the future as they IPO, it's obviously too soon to say exactly when or if these companies will this year.
Okay, these companies, that includes Anthropic. I just want to flick out another piece that you wrote, this one along with colleague Mark Anderson, about Anthropic accidentally exposing its system behind Claude code. Human error in this case, what exactly happened?
Yeah, so the company acknowledged that this was human error, not a sort of hack. However, this is source code. So this is the underlying material that goes into the Claude Code product. We're already seeing some users try to replicate that code now and put it out there. Wow. And that is not a good outcome for the company. So it raises questions about what went wrong, how they're going to stop that again, especially given earlier in the past week, they had another incident with another kind of human error leaked blog post.
Bloomberg Shireen Ghaffari from our AI team. Check out her reporting and the entire team's reporting on the Bloomberg terminal and at Bloomberg.com. Well, at the same time, shares of OpenAI have actually fallen out of favor in the secondary markets. Investors have been looking to offload as much as $600 million worth of shares, but finding no buyers. Instead, seeing demand surging for rival Anthropic. Bloomberg's Hema Parmar covers hedge funds, and she joins us now. So Hema, what's going on here? Because it seems like there's this disconnect, at least with the latest funding round that I just talked about with Shireen, and what you're seeing or what hedge funds are seeing in the secondary market. What can you tell us?
So the secondary market's really interesting, and what they're paying attention to right now is this valuation gap. So the gap between the $380 billion valuation for Anthropic and this $852 billion valuation for OpenAI. And if you are thinking that Anthropic is going to have a round in the future and it's going to close that gap and it could be sizably bigger, you might be looking to snap up Anthropic shares now to get in early as that gap potentially narrows. And so when you look at the two options, OpenAI may seem in less of a favor compared to the hot demand. We're seeing Anthropic shares in the secondary going for a valuation of $600 million or more.
It's incredible. I mean, it just shows how quickly things can shift. And we did see last week a move away, at least from Sora for OpenAI, maybe streamlining before an IPO. And also really leaning into what Anthropic's bread and butter is, the idea of coding and selling to enterprise customers. What's amazing to me is really how quickly this has shifted, and wonder if it can actually shift back a different way anytime soon. How quickly do things move in the secondary market?
So the secondary market moves slower, obviously, than stocks would do, but you can see changes within a few days, within a few weeks. When you look at companies like OpenAI, there are some concerns about the spend. And this raise will help to absorb some of those costs. But when you look at the expenditure that some of these companies are making in AI, huge costs. And then when you look at OpenAI, the leading into enterprise a little bit slower than Anthropic. But not to say, I mean, they've raised $122 billion from sizable investors. The other thing to think about with the secondary is sometimes existing investors may seek liquidity, not because they're souring on the company, but they just either want some extra money to play with, or they see their position is already sizable within their book.
Maybe you got to buy a house or a plane or something. I don't know. Bloomberg's Hema Parmar. Thanks so much. Check out Hema's story on the terminal. We got some breaking news right now. Billionaire Elon Musk's SpaceX has filed confidentially for an IPO. Let's check out more about timing with that in just a few minutes. We're going to have more details on that coming up. In the meantime, a conversation on AI's expanding role in cybersecurity. We're going to break with Armada CEO Kevin Mandia. That's next on Bloomberg Tech. SpaceX has filed for an IPO. Some breaking news. Let's get to our own Ed Ludlow, who's at Kennedy Space Center in Florida. Ed, this story that you wrote along with Bailey Lipschultz, SpaceX said to file confidentially for an IPO ahead of AI rivals. What can you tell us about timing? What did you learn?
Yeah, I mean, the main thing and the important point of us confirming via sources that the paperwork is in is it probably does put SpaceX on track for a June IPO. There has been lots of reporting about will they or won't they, as a starter gun moment for the broader IPO window. But of course, the mechanics of what they're trying to do, raising $50 billion plus maybe $75 billion at the high end at a valuation of $1.75 trillion, it's going to take a very large coalition of bankers and banks to run that book in what will be the biggest IPO in history on a dollar raised or valuation perspective. So we've known this was coming, but it is a big psychological moment for the markets that it's in, and it sets SpaceX up to execute on the groundwork that they've been putting into place for a little while now.
It's a great piece. We're going to have more from Ed Ludlow from Kennedy Space Center a little later in the program. Breaking news coming from Ed and Bailey. Check out their story on the Bloomberg terminal for more. Well, as we mentioned, Anthropic has accidentally exposed the source code behind its AI coding assistant, Claude. In an emailed statement, Anthropic said no customer data or credentials were involved and that the issue was caused by human error and not a security breach. The incident comes as the company is pushing back against a U.S. government designation labeling it a potential supply chain risk. Joining us now to discuss the role of AI in cybersecurity is Kevin Mandia, CEO of Armada. And it's an AI platform that simulates real-world attacks to identify and fix vulnerabilities. And Kevin, that's exactly where I want to start, the vulnerabilities of this. With that Anthropic story that I talked about with Shireen and just mentioned, this vulnerability seems to be as a result of user error, not necessarily an attack. How do you look at that in the context of overall vulnerabilities when it comes to the threat landscape today?
Well, no question. Whenever you lose source code, there's a reputational hit. But that's, when I looked at this case, they didn't lose customer data. They didn't lose customer credentials. They didn't lose customer model weights. And that's where the magic happens when you use agents, because agents have total recall on your data and how you purpose those agents. So this is one of those things that happens to companies whenever you have a human in the loop. You have a process that's potentially frail or degrades over time. So they're going to have to manage through the reputational hit on this. But at the same time frame, I'm a cybersecurity expert, and I look at this. Whenever you lose source code, there will be folks that scour that, looking at ways to how does this software work and how do we take advantage of it, maybe in this case with prompt injection. So all you're really going to get out of this, Tim, is probably a faster release cycle, because now you have millions of people looking at your code that you never intended to have them look at it. So you're going to have a fast release cycle should there be any identified vulnerabilities from the extra million sets of eyes that are looking at your source code.
You were the founder and CEO of Mandiant before it was sold to Google Cloud. You're former CEO of FireEye. You have been doing this for decades.
Right.
This era that we live in right now, with soon to be everybody having an AI agent that can act on behalf of them, and also seemingly perhaps bad actors having AI agents that can act on them. How does that look out there today compared with other times in this industry? Are we more vulnerable now than ever before?
Yeah, that's a great question, Tim. I think we're going through an inflection point, and I hate that term, but it's just dead reality. Whenever you see a shift change in technology, the unfortunate reality is that usually malintent can be implemented faster than positive intent. That just is what happens. So you look at the internet, it allows people to commit crimes or try to make money from 9,000 miles away from where they perpetrate the crimes. And wherever money goes, crime follows. Wherever information goes, espionage follows. That's our systems. So you're going to see in under 2 years, AI agents, because they can think and learn and have total recall, they will become the offense in the cyber domain. And the cyber domain's always been contested, Tim. There's always been bad guys on this, on the internet. But now these bad guys or the espionage actors are going to be able to use agents to work at compute speed. So the change we're going to live in the cyber domain is that you're going to see the speed of attack go way up. So vulnerability discovery will be condensed down to seconds rather than days or minutes. And you're going to see over time defense have to be autonomous. It can't have humans in the loop. So we're going to go through that inflection point over the next 2 years. But agentic AI is absolutely going to speed up the risk that everybody has in the cyber domain.
Kevin, forgive me, we only have 20 seconds left, but how are you now doing that and addressing that at Armada?
Well, we are addressing it. What you're going to see is Armada is going to be all offense all the time. We're going to be the agents that train your defensive agents so you can respond at the speed of compute, respond autonomously to the threats that emerge. New and novel threats will be found by the good guys before the bad guys.
Kevin Mandia, Armada CEO, joining us from San Francisco. Kevin, good to see you. Well, coming up, Intel moves to buy back half a chip plant in Ireland, signaling renewed confidence. Look at the stock, up more than 9.9% today. We're going to have more on that deal next. This is Bloomberg. Welcome back to Bloomberg Tech. I'm Tim Stenovec in New York. Let's take a look at markets on this first trading day of the second quarter after a really bruising first quarter of the year. The S&P 500 up about 1% right now. NASDAQ 100 up 1.4%. This after a really bruising first quarter where the NASDAQ 100 fell about 6%. The S&P 500 fell about 4.6%. Brent crude still above $100 a barrel. The war in Iran still weighing on overall sentiment. You can see Brent down $2 a barrel. That's about 2%. But at these elevated levels, still a lot of questions about what the duration of this conflict actually looks like. Well, shares of Intel are surging right now. The chipmaker has agreed to pay $14.2 billion to buy back half a plant in Ireland that it previously sold to Apollo Global Management. Bloomberg's Ian King covers semiconductors, and he joins us now from San Francisco. Ian, the stock reaction to news such as this, what does that represent about how investors are thinking about Intel right now?
Well, they said themselves that this is kind of a sign of confidence in where their business is going, and it would appear from the reaction that investors have taken them at their word and believe in that. The sort of background to this is that suddenly the CPU, the chip that Intel specializes in, has become kind of an area of interest again, and people are betting that this is going to be part of AI data centers to a greater extent going forward.
Is that what changed between now and a couple years ago, Ian, when Intel sold this stake in this facility?
Yeah, I mean, what's really changed is Intel's balance sheet. When they sold this stake to Apollo, they were, this was just one of a number of deals that they were doing, basically, to get liquidity, to make sure that that balance sheet wasn't going to drag them down even further. Since then, they've got money from the U.S. taxpayer, from NVIDIA, from SoftBank, and, business has started to improve. The losses have definitely narrowed. So what they're doing is basically saying, hey, this plant can be a moneymaker going forward. We want to own all of it, and therefore we're going to do that now. We're going to use our improved balance sheet.
Okay, 18A, the technology that's being rolled out first in the company's U.S. factories, what does it do?
Yeah, I mean, this is their latest production technology, and this is supposed to get them essentially back in the game. The better your production technology, remember, with advanced semiconductors, the better your products are. So this is supposed to sort of reassert Intel on the front line of what this industry is capable of and make it sort of comparable to what TSMC is doing. But the next one, 14A, that's going to be the real test, whether that gets off the ground and whether, as Intel claims, it'll get it back to the absolute forefront of what's out there.
Bloomberg's Ian King covers semiconductors out there in our San Francisco bureau. Ian, thanks for joining us on Bloomberg Tech. Well, child development experts are calling for YouTube to ban AI-generated videos from the feeds of young users. More than 200 children's specialists, advocacy groups, and schools sent a letter to the CEOs of YouTube and its parent, Google. Let's get the details with Bloomberg social media reporter Alexandra Levine. Alexandra, good to have you here. The concern about AI slop, or so-called AI slop, well, in fact, that's what Google, or that's what YouTube CEO has called it in the past. How does that affect, or how do these advocates say that affects a child's brain differently than a traditional short-form video that may have been made by an actual human being?
Yeah, well, as we know, concerns about kids and screens and how much time they're spending in front of platforms like YouTube are not new. What is new here is sort of the AI piece of this. The growing concern about AI in particular is that as young minds are developing, child development psychologists and other medical experts are worried that children are not going to be able to understand the difference between what is real and what is not, what is truth and what is not. There's also concern that because AI slop tends to be very eye-catching, very clickbaity, very spammy, that will be more time spent in front of a screen, and that time spent in front of a screen, they're concerned, is going to be displacing other kinds of real-life activities that are key to emotional, social, cognitive development.
Where does YouTube come in on this? Because they have in recent years rolled out an entire slate of tools that are supposed to be part of this YouTube Kids platform. Where do they fall?
YouTube has said that their priority for 2026, or one of their key priorities for this year, is managing AI slop and making sure that YouTube remains a place where people want to be spending their time. They have said that they have labels that they show. I think these advocates are concerned kids can't actually read the labels, and oftentimes the labels are not actually appearing. And Google has put out this whole slate of AI tools, but the advocates really feel like that is putting the onus on parents and caregivers and the kids themselves to be trying to avoid and dodge AI-generated content on the platform versus YouTube actually taking the proactive step of just wiping it for younger users broadly.
We don't have time to talk about this, but it enters the whole debate about whether kids should even have access to this stuff in the first place. So the story continues.
It does.
Alexandra Levine of Bloomberg News, thanks so much. Well, a new report finds U.S. government requests for user data from tech companies have skyrocketed by 770% in the past decade. The research from privacy company Proton was based on public transparency reports from Apple, Google, and Meta. It shows the increase has been bipartisan. A Google spokesperson told Bloomberg that it reviews each request to ensure it complies with the law. Meta said the number of fulfilled requests has remained consistent despite the government's increase. Apple didn't respond to a request for comment. Coming up, AI data centers hit a supply chain bottleneck. What's showing and slowing the infrastructure build-out? That's next. Also, watching shares of Eli Lilly. Eli Lilly's weight loss pill won U.S. approval, ratcheting up pressure on Novo Nordisk, which launched an obesity pill earlier this year. The review process took less than 4 months, thanks to a new FDA program designed to expedite access to promising medications that meet national priorities. This is Bloomberg Tech. The U.S.'s AI ambitions are hitting a key bottleneck: power. Nearly half of the data centers planned for this year are now expected to be delayed or canceled as the country grapples with a shortage of critical electrical equipment and a growing reliance on imports, particularly from China. Bloomberg's Emily Forgash has the report. Emily, how did we find ourselves in a position where we were so reliant on China for these products?
Yeah, so the U.S. manufacturing capacity for these really key critical electrical parts that help get data centers up and running is just not enough right now to meet the booming demand to get all of the data centers that companies are building actually up and running.
You know, there's this paradox between the president's America First policy, the goal of beating China in the AI rise. How does the U.S. sort of thread this needle?
Yeah, so the president wants an American First doctrine and wants American manufacturing to build these data centers. But we're reliant on key parts from foreign countries, including China, to beat China in the AI race, whereas China is somewhat reliant on the U.S. for its chips to beat the U.S. in the AI race.
I want to go back to this stat that I read at the top. Close to half of the data centers planned for this year are now expected to be delayed or canceled. What does this mean for the hyperscalers who have come out quarter after quarter and said, we are actually spending X billions of dollars this year on these data centers? Where does that money go?
Yeah, it's a great question. That's the $1 million question, or maybe $650 billion question. Yeah. So basically, half of the data centers that are scheduled to be built this year might not actually come online this year, and that's because only around a third of those data centers are actually under construction right now, and data centers take at least a year, if not more, to actually build. So that's where Sightline Climate is kind of getting their risk evaluation from.
All right, Emily Forgash with the latest. Check out her reporting and the team's reporting on the terminal and at Bloomberg.com. All of this comes as Washington is weighing how to build a national framework for artificial intelligence and how to ensure the U.S. can actually deliver on its AI leadership goals. Joining us now is Kevin Frazier, Adjunct Research Fellow at the Cato Institute. Kevin, I want to start where we left off with Emily just now and this bottleneck that we're seeing when it comes to developing these data centers. What, in your view, would be the right policy to decrease the U.S. reliance on China for these key parts?
Yeah, so first and foremost, we need to consider this AI infrastructure build out as a national challenge. We've seen that across 11 different states, there have been considerations of bans or years-long moratoria on data center creation. And as you know well, data centers aren't just for AI. We need data centers for healthcare, for commerce, for all the things that make the internet go. And so we need to really emphasize that states, cities, and the national government all have a role in making sure we can build AI infrastructure that's aligned with our AI ambitions.
Okay, so yes, in my backyard is certainly, in your view, a big part of this, but that still doesn't address the component problem that Emily and the team highlighted in her piece. How do you make sure that the U.S. actually has access to these key components, these key parts, when China has a stronghold on them?
So this is where we really do need to work with our allies in developing and strong-arming our supply chain network across the entire AI tech stack. As you've noted, we've seen that when it comes to chips, when it comes to things like helium that's being locked up in Qatar, we have a long ways to go in terms of making sure that we have that sort of resilience and redundancy that's required to build AI at scale. And so this requires, ultimately, unsurprisingly, funding and political leadership. And right now we're seeing that there's a sort of tendency to not be swimming in the same direction on this AI question. And that's in part for understandable reasons, but ultimately we need to make this a national priority.
Funding from whom, though, Kevin? A national priority, does that mean you want to see the U.S. government and taxpayers shell out money for this stuff?
I do want to see increased investment from the U.S. government in this domain. We've seen over the history of our nation that when it comes to critical infrastructure, ultimately the central government does have a role in making sure we have a national highway system, in making sure that our port system is resilient, to go all the way back to the Articles of Confederation. So yes, this ultimately is a core purpose of the government, is to make sure that basic infrastructure for the technologies of an age is available and not subject to geopolitical conflict.
So your view is that infrastructure such as this is as important, at least historically in the current context, as highways, as ports, as other huge national projects. How do you get leaders on board with this?
So first and foremost, we have to do a lot of work in terms of just making sure we're addressing a lot of the myths that are being spread about this AI build-out. So for example, there was an article recently that made headwinds and made the rounds on social media about how data centers were creating heat islands wherever they were being built. Well, if you talk to folks like Andy Masley, who studied this issue closer than just about anyone, we see that a lot of this information is in fact bunk. And so the more that we have sort of misinformation flowing about how AI is being used and developed, those are ultimately distracting questions. And we need to move on to the questions related to the fact that AI is increasingly a national security imperative. We're seeing right now, for example, in the war in Iran, that militaries are using AI in ever more sophisticated domains. And it's a real national imperative that the US military have access to leading frontier models that are the most capable and that are the most reliable across the world.
Kevin, you study this stuff, so maybe you have an answer, because it certainly doesn't seem like a lot of people do have answers to this. If we look at increased demand for electricity across the grid, and the way that the grid is being taxed in a way now that many people didn't think it would be in the year 2026, and the projections for the future, how do you balance the desire and the need, in your view, to build these data centers in the US, draw on power from American power plants, but also make sure that American consumers aren't seeing hiked power bills as a result? Is it even possible?
I would say it is indeed possible. So I'm a man of many tired lines. One of my tired lines is today's AI is the worst AI we will ever use. I'll also say that today's data centers are the worst data centers we'll ever use. There is a huge incentive for these hyperscalers to invest in means for more efficient data center operations. And we're seeing that states like Oklahoma, for example, are enabling behind-the-meter power that allows for these labs to build out more renewable and efficient data center operations. And so we've actually seen that when you talk to folks like Gavin McCormick at Climate Trace, that there are opportunities for labs to actually assist with making the grid more resilient and actually increasing the grid capacity by virtue of doing training runs, for example, at low hours of typical power usage.
Kevin Fraser from the Cato Institute, thanks for joining us on Bloomberg Tech. Well, coming up, 4 NASA astronauts are expected to board a space capsule and blast off to the moon later today. We're going to get the latest on Artemis II. That's next. This is Bloomberg Tech. It's launch day for Artemis II, NASA's planned return to the moon's vicinity for the first time in 50 years. Let's get over to our own Ed Ludlow, who has traded the West Coast for the East Coast of Florida. He's live at Kennedy Space Center. Ed, why is this such a critical moment or a critical test for NASA's SLS?
Yeah, it's a dress rehearsal for the systems, right? The SLS rocket system developed by Boeing, the Orion spacecraft developed by Lockheed Martin. It's only launched once before in 2022 and is never launched with humans on board. It is a project that is over budget and behind schedule. But if we go today within the 2-hour window starting at 6:24 p.m. Eastern time, it is the first time not only that America and NASA and the world has tried to put humans back towards the moon, but it's very deep into space. It's a 685,000 mile round trip, 250,000 miles plus from Earth, that will take the crew over that 10-day period, just 4,000 miles off the moon's surface. And I bring that up because that's the ultimate goal, as early as 2028, the next stages of the Artemis program to land back on the moon.
When the space race was happening in the 1960s, it was all about the USSR versus the United States. And that was the geopolitical context at the time. Now it's different. Now the superpower is China. What are China's ambitions?
Yeah, very simply, China has stated its ambitions to get to the moon by 2030, and NASA has accelerated its plans in part under the new leadership of Administrator Jared Isaacman to do as early as 2028, establish a base on the moon, a $30 billion commitment over a decade from this current NASA administration. That is the current space race that we are in.
Ed, you and I spoke just a few minutes ago. You and Bailey out with this piece, exclusive Bloomberg. SpaceX said to file confidentially for an IPO before AI rivals. Why are we talking about the SLS when SpaceX in a few years could do this? Could that displace the SLS at some point?
SLS has had a lot of issues, principally with hydrogen leaks. Hydrogen is the fuel with oxygen as the oxidizer. And if the system goes tonight, it will be the most powerful human-rated system to launch. 8.8 million pounds of thrust at liftoff. Now, Starship, the system that SpaceX is working on, is almost double that in terms of power, but it has never completed a mission end-to-end and has not yet done human spaceflight. But as we've reported at Bloomberg, there is a proposal on the table from SpaceX for a variant of the existing Artemis plan where SLS would carry Orion into low Earth orbit. In low Earth orbit, Orion would dock with Starship, and Starship, under this proposal that NASA has greenlit but is not final, would push Orion to low lunar orbit and go from there. There's also a lander proposal from SpaceX as well. So they're in the hunt for this, but the IPO and the confidential filing we reported earlier be under no... the straight matter of it is SpaceX raising capital to fund data centers in space. Completely separate story.
Okay. Ed, just 30 seconds left on this. And obviously, I'm going to Mars. And that's the question that we want answered here. How does a successful flight tonight set up a future human potentially on Mars?
Yeah, again, this is a dress rehearsal for the systems with the goal in the near term of getting humans back onto the moon's surface 2028, establish a base on the moon's surface with the academic argument that deploying resources, literally launch capability or refuel from the moon to get to Mars in the future is one interesting avenue. And those are the goals. Nearer term, it's the moon, but longer term, there is still a commitment from this NASA administration and this country to getting humans to Mars. And again, SpaceX retains that ambition of making humans a multiplanetary species with the end goal being Mars.
All right. For now, Ed's at Kennedy Space Center, Cape Canaveral, Florida. Bloomberg's Ed Ludlow live there. Stick around with Ed right here on Bloomberg as we follow the launch live. That's at 6 p.m. Wall Street time tonight. Well, speaking of Elon Musk, he wants Tesla's future to be all about AI. But at present, the EV maker still needs to sell cars. The company releases its sales figures tomorrow, and analysts are expecting the last quarter to be a bit of a sluggish one. Bloomberg's autos reporter Craig Trudell has the details. Craig, I thought analysts said that the stock price of Tesla is completely divorced from autos right now. Why is this still such a closely looked at figure?
Yeah, I think it's still a debate, one that maybe looks like it was settled months ago when you saw the auto business for Tesla just really show signs of deteriorating. I think especially early last year, right, where we saw the shares of this company get off to such an awful start, and yet even as we didn't necessarily see a major improvement in car sales, we saw the shares come back because Musk was sort of pushing this narrative of AI and robots. We're now seeing the shares have a hard time just early this year, in part because of the fact that this is still not a settled issue, and this is still a company that, after all, makes so much of its money building and selling cars, and is still very much at the early stage, the sort of prototype stage of making things like the humanoid robot Optimus that everyone's excited about, but it's really hard to value at this juncture.
Yeah, perhaps that's a really good segue to talk about this report, this exclusive from Ed and Bailey about SpaceX said to file confidentially for that IPO. Just in the last 30 seconds that we have with you, how are analysts talking about Tesla potentially becoming part of SpaceX after this becomes a public company?
I think it's a really fascinating question. I think this is all, for me, coming from a perspective of Tesla and SpaceX. For all the success they've had, they've not been the sort of money spinners that a Alphabet or a Facebook are, right? and Musk has such outsized ambitions to play with the big boys in terms of AI. Does he need to combine these companies in order for them to help raise more money and fund this AI race?
And maybe, of course, get that big payday in the next few years. Bloomberg's Craig Trudell, live from London. That is going to do it for this edition of Bloomberg Tech. Don't forget to check out our podcast. Find it on the terminal, Apple, Spotify, and iHeart. This is Bloomberg.